LiteFinance, the world of financial freedom.
Hello, it's Monday, December 12th, and it is time to start the market forecast. As usual, first we will run down the calendar and then we will switch to fundamental analysis. This time we will discuss the British pound. And so in the end we will make a trading plan for GBP USD currency pair. So let's begin with the macro data publications. On Monday early in the morning we got the UK's GDP numbers and manufacturing production. On Tuesday we will get average earnings and claimant count change from the UK, OPEC monthly report and US CPI data. Late in the evening we will end the day with Japan's large manufacturers and non-manufacturers indexes. On Wednesday we will get inflation data from the UK, crude oil inventories, and most important event of the week, i.e. FOMC interest rate decision, where consensus and futures contracts predicts that we will see 50 basis point increase. What is also worth noting is that we will get rate projections, and this will be the key component which will move the markets. Right now, Powell gave more or less clear signs that they will slow down the pace of hikes, so it is not a mystery for the market anymore, and investors are already pricing this. What they are not sure about are future rates projections, since there is a variety of voices from the Fed officials, from hawkish ones to more dovish stances on final rates levels. So just remember to focus on those numbers as well, not only on current rates. Then on Thursday, we have another round of central banks that will raise their rates as well. We have SNB, Bank of England and ECB, who will increase their benchmarks by additional 50 basis points each. On Friday, we will receive retail sales from the UK and a round of PMIs from Eurozone, US, Japan and again from the UK. But the most important figures for the end of the week are going to be Eurozone CPI data. So as you can see, it is a lot of data to take into consideration when making trading decisions. So right now, maybe let's check what is going on in the UK's economy, since we will get a series of data from the kingdom this week, because when downbeat forecasts don't come true, a currency has every chance to grow. So that goes both for the euro and the pound. And the recession in the end might turn out to be not too deep and won't thus mean a fall of GBP USD. But right now many of us are asking ourselves, why is the pound growing if the British economy has already tanked into a recession, hasn't recovered after the pandemic in contrast to other G7 economies, and the Bank of England has delayed a raise in interest rates? The thing is, the slightest positive information can inspire GBP USD bulls when the market feels pessimistic. This is called a positive surprise. Everyone talked about the UK's economic problems. The Bank of England was the first G10 central bank that forecasts a recession that would last for 5 quarters in a row. Besides Brexit, the pandemic and the energy crisis, the British Chambers of Commerce has mentioned one more turmoil amid this Truss government's mini-budget. According to the BCC, a storm in financial markets hasn't been painless for the economy that now has to adopt to Rishi Sunak's higher taxes. As a result, GDP is expected to reduce by 0.9% in October to December quarter, and the recession to deepen in first to third quarter in 2023. So if the economy feels so bad, why does the sterling feel so good? Because reality can be much different from forecasts. The latest stats on Great Britain are more optimistic than the US, the Eurozone's or China's. The City Economic Surprise Index shows us that. So the GBP USD bulls feels enthusiastic. Is the Bank of England's monetary policy a headwind or a booster for the pound sterling? It is hard to say. In contrast to the Fed and the ECB, there is no consensus among market forecasts for the BOE rate. So we can assume that the reason for that is a split in monetary policy committee. Some members are desperate to fight inflation, while others are more concerned about the economy. As a result, monetary policy becomes uncertain, which can support or weaken the pound. It currently supports, of course, the pound as the Fed's monetary restrictions slow down. However, Reuters believes the GBP USD will depreciate 5% in 3 months and will be traded at 1.16. I think that happened only if the US inflation unexpectedly soars, but if consumer prices in the US continue slowing down, traders will have a chance to build up longs in GBP USD opened at 1.215. So, resuming things up, slower CPI growth and a moderate rise in FOMC's forecast for the federal funds rate, as we talked about a minute ago, will increase the risk of the pounds rallying to 1.243 and 1.253. But remember, US CPI data comes first, and there should be a good chance to position yourself for the rate decision on Wednesday. So, okay, that is all for this video. Thank you guys for watching, and till next time, goodbye.